and welcome to today's session on driving financial inclusion through mobile money diversification. I'm Julian Mwahiri, and I'm the Data and Insights Director, Mobile Money, in the GSMA Mobile for Development Program. And I thank you all for joining us today in today's discussion. Over the next 45 minutes, we'll hear from a panel of speakers representing a mobile operator and a mobile money provider, that's MTN Uganda, an African tech innovator, Twiga Foods Kenya, and a supernatural NGO, the World Food Programme. From these three different organizational perspectives, we will highlight the diversity of mobile money use cases across different African contexts. We will explore where these applications drive financial inclusion among underserved communities, how they contribute to climate resilience, and ensure business sustainability. The objective of this session is to highlight the diversity and growth of the mobile money ecosystem, including new mobile money-enabled initiatives that contribute to the financial inclusion of citizens across the African continent. As you are listening to our speakers today, we hope that you will be able to engage with them, and there are a number of ways you can do that. First, you can just pop your questions directly into the chat section, or otherwise, you are more than welcome to email us your questions and comments in the addresses provided in the chat, and the team will provide those. We will be behind the scenes collecting these questions and comments and get as many of those as possible to a moderator during the panel discussion. And those that we're unable to answer during the session will be followed up by email in the addresses provided. But before I invite our distinguished panelists, I'd like to share with you briefly the Fintech advances enabling sustainable growth of the mobile money ecosystem and the potential for greater financial inclusion that will set the stage for our panelists' discussion. The diversity and the growth of the mobile money ecosystem is underpinned by enabling technologies. These enablers improve the accessibility of mobile money, opening it up for more customers. The enablers improve the ease of use for existing customers, and they assure security and privacy so that users may be confident that their money and their credentials are secure. They also enable mobile money services to be linked to other services, to banks, and to adjacent financial services and beyond, where mobile money payments bring new opportunities. Over the years, we have witnessed a diversification of use cases. Mobile money has traditionally been used for in-person and digital services for cash in, cash out, person-to-person transfers, and airtime top-ups. However, with fintech innovations, new services have come to bear, extending mobile money to be able to pay for bills, to send and receive international transfers, and to link with governments and NGOs for bulk disbursements to citizens during crises, among others. And with a push towards payment as a platform model, new partnerships have formed between MNOs and banks, insurers, payment service providers, merchants, app and content developers, offering credit services, savings, insurance, and B2B services, among others, opening up opportunities in various sectors of society. We have seen financial inclusion being realized in a lot of events. Diversification of mobile money-enabled services offers more choice and potential for greater impact of people's lives and businesses. These more diverse services, if thoughtfully designed and rolled out effectively, can incentivize customers to move from simply registering for an account to actively using their account and mobile wallet, and therefore achieving financial services. And with support of agent networks who remain crucial in increasing the use of digital services, they create further opportunities for citizens, businesses, and governments. The diverse mobile money-enabled ecosystem has many examples of impact. NGOs provide mobile-enabled cash and voucher assistance to those in Somalia, for example. Smallholder farmers in Kenya are able to access agricultural insurance through their mobile money account to protect their businesses. Traditional women's savings groups in Tanzania have been supplemented by a mobile money-enabled digital equivalent. Informal entrepreneurs in Ghana have the opportunity to receive quicker and more efficient payments from the customers at lower costs. And the customers in Uganda have been able to access clean solar energy to power their homes through their mobile money service. The impact has been tremendous. And with that, it is my pleasure to invite Ashley Olsen Anyango, the head of Financial Inclusion and Agritech at the GSMA, who will be moderating this discussion. Over to you, Ashley.
Thank you, Julianne. I'm really pleased to be here this morning. Welcome, everyone. And I'm super excited to introduce our three esteemed panelists and kick off what is bound to be a great discussion on the advances in fintech and the contribution this has had on financial inclusion. So before we get started, I'll introduce our panelists to you. First, we have Cheryl Harrison, Deputy Director, Cash-Based Transfers, UN World Food Program. Welcome, Cheryl. The World Food Program is the world's largest humanitarian organization, saving lives in emergencies and using food assistance to build a pathway to peace, stability, and prosperity for people recovering from conflict, disasters, and the impact of climate change. The World Food Program uses cash transfers to empower people with choice to address their essential needs in local markets while also helping to boost these markets. The World Food Program is an important partner of ours at GSMA, and we are pleased to partner with them on a number of initiatives. Thanks for joining me today, Cheryl.
Thanks so much, Ashley. Really excited to be here.
Great. Next, we have Caine Wanjao, CTO of Twiga Foods Kenya. Welcome, Caine.
Thank you, Ashley.
Great. In sub-Saharan Africa, 90% of retail is informal, highly inefficient, and characterized by layers of intermediaries. Twiga simplifies the supply chain between fresh food producers, fast-moving consumer goods manufacturers, and retailers through a B2B e-commerce platform. This removes the need for many intermediaries, significantly lowering the cost of food for consumers. We're super excited to have you today, Caine. Thanks so much for joining me. And last but not least, we have Peter Ochen, Senior Manager of Finance and Administration, Mobile Money of MTN Uganda. Hi, welcome, Peter. And MTN Uganda is a subsidiary of MTN Group, a multinational telecommunications group connecting over 200 million people across Africa and the Middle East. MTN Uganda has been providing mobile money services to consumers and businesses for over 10 years. So moving to our discussion, as Julianne rightly shared, advances in fintech are driving the expansion and diversification of the mobile money ecosystem. This diversification has led to mobile money being adopted by consumers, NGOs, governments, and businesses from all industry sectors. The objective of this panel is to highlight the diversification by exploring impactful examples of new mobile money-enabled initiatives that can drive financial inclusion and business sustainability. So kicking off the discussion, Peter, I want to turn to you and talk about mobile money, MoMo, in Uganda. Where are you seeing growth and demand for mobile money services beyond traditional person-to-person transfers and airtime top-ups? And what impact are these growing services having on the lives of customers and businesses in Uganda?
Well, thank you very much, Ashley, and everyone. I'm really very proud to be here and speak about mobile money in Uganda and the evolution that it has taken so far to date. Well, in Uganda, we started, of course, about 2008, and you're right, it's over 10 years now. And with the traditional, of course, P2P and cash out and buy airtime. But over time, mobile money has evolved with many services that our customer today enjoy. The first and the most important one is that of loans and savings, which our customers, I would say, below the pyramid did not have access to. Now, given the fact that they've been transacting on the mobile money platform and we had records of these customers, we were now able to actually credit score this customer and be able to give them some micro kind of loans that would support them in their day-to-day activities or business activities. So this is one product that was in the past very much sealed and only available in the banking financial institution. So mobile money through partnership, of course, also as well with the banks, has been able to provide this to our customers below the pyramid, something highly taken up by the customers. The second innovation that came up has also been taken up by our customer is e-commerce. Now, e-commerce has now allowed our customers to be able to even trade with the entire world. Using your Momo, you are actually able to even order online, and as opposed to using a traditional credit card that was being used to purchase online, now with partnership with banking financial institution, our Momo customers are able to create virtual cards and also be able to use their Momo wallet and purchase online. So these are new innovation that came up. The next one is called, of course, bill collection. The innovation in this area has been amazing, right? Most of our bill collectors, I would give an example of utility companies, had branch network across the country where our customers had to walk to a branch to deposit money to pay for their bills. Today, at the comfort of their homes, using Momo, they can easily pay for their bills. And most, if not actually all these branches have so far been closed. And this is all because of the innovation in the Momo space. Then getting a bit more deeper into what we call the merchant market, the wide merchant market. The merchants today all have adopted, and I also majorly because now we also had COVID coming up and the fact that holding cash was a bit of a situation. Now our merchants have adopted to the digital collection approach, and that is using Momo, which has also been one area of very great innovation over the traditional P2P and cash in, cash out. Then one most important, which I need to really highlight, is the interoperability that Momo has also brought. Now, customers are now able to send money across the other networks, be it banks. A Momo customer is able to send money to banks through what we call a bank push. They can also pull money from the bank to their wallet. That aside, they can also share now, send money to other fintech companies. For example, in Uganda, we have Airtel customers as well on Airtel Money. So MTN mobile money customers are able to send money across to the Airtel customers. And last but not the least, there has also been a bit of innovation in the area of government payments. Our customers today can also pay for taxes at the ease of their home without having to struggle and rush into bank and lining up to try and make a payment for their taxes when it is due. So these are some of the few innovations that I can actually give you, but that all in all has provided financial inclusion for our customers who were not able to actually get this, below of the pyramid customers, and also the ease to access and pay within the country and also outside the country. You can access Momo. Thank you.
Thank you, Peter. Caine, moving over to you. Peter touched on commerce and merchant payments, and Twiga Foods knows a little bit about other use cases and value-added use cases of mobile money. Working in the agricultural supply chain, can you tell us a little bit more about what Twiga is doing and the role that mobile money plays in your business model?
Sure. Thank you, Ashley, and thanks for the question. So yeah, at Twiga, we use mobile money pretty much across all our supply chain. This is both on the purchasing and sourcing side, primarily from farmers, but we've now extended that to other suppliers as well. And also when we deliver to vendors, we try as much as possible leverage on the fact that mobile money is very prevalent in Kenya and encourage that as the primary use of payments. Now, for us, we see this as material and significant in how fast we've been able to grow as a business, because right now we serve thousands of vendors on any given day. And you can imagine trying to reconcile cash or using a non-mobile money option. Be quite tedious and quite a lot of process for us. So it goes even into how we've designed our business processes, how we've designed everything to do with how we've structured our software and infrastructure to make mobile money easy for us to collect and also easy for us to reconcile, not just at the customer level, but also within our business operations. Looking forward, as now Twiga is starting to scale across, to start to scale across the continent, the way we're looking at this is mobile money will be key and an anchor in helping us really move efficiently in other markets. People have become more comfortable using mobile money, not only for P2P, but also C2B, customer to business. Of course, for us, we'll continue to leverage on the business to person and business to business options, because that's how we primarily use the payment side of things. And then seeing what other innovations we can build on top of it. So things like customer wallets, enabling customers really make most use of their mobile money accounts in their transaction with us, is how we see this moving forward. But yeah, net, it's been positive to date, and we're looking to leverage on the learnings to continue to build on the successes so far.
Thanks, Caine. It's great to hear private sector use cases for mobile money. So with that, I want to turn to you, Cheryl, and talk about how World Food Program uses cash-based transfers and uses mobile money to reach those communities in disaster, reach them to provide resilience to shocks and crises that can be exacerbated by certain things like climate change, for example.
Okay, thanks so much, Ashley. And yeah, I mean, climate change certainly is one of the biggest causes right now of hunger, displacement, and poverty, really. So it's one of the biggest areas of work for WFP. So World Food Program, WFP, we're a United Nations agency. We're the humanitarian arm of the UN, and we're the largest humanitarian agency globally. And as you can tell from our name, our origin story is in food and largely about providing in-kind food to people who are in desperate need. But since about 2009, we've increasingly been shifting the assistance that we give to cash. So now, for example, in an average year, we're giving about $2 billion in cash to about 40 million people globally. That's in 67 countries. So almost every one of our operations, we're using cash transfers. And we used mobile money early on in countries that were early adopters. So for example, in Kenya, we have been using mobile money transfers since 2010, I think. M-Pesa obviously broke ground there for us and was such an amazing product for the people that we were trying to reach with money. But we're not using it nearly as much as we would like to. Only about 10% of our cash transfers do we do through mobile money. So some of the most interesting, shall we say, transfers in relation to your question around climate change are using mobile money, for example, to transfer money to people before a climate-related shock happens. So, for example, this year in Bangladesh, we were able to watch the progression of the monsoon rains, and we were able to see in advance which populations were likely to be affected by the flooding and to what severity, to what extent. So we worked with those communities to make sure that everyone had a wallet ready. And prior to the flooding actually happening, we were able to transfer money to people. This just made their lives so much easier because rather than swooping in with food after the fact, people could actually use the money in advance to plan to protect their assets, their homes, their livestock, to maybe to move. Some people had to move to escape it. So it meant that their suffering during the disaster itself was less. And they were able to bounce back quicker. So we see this use of mobile money and humanitarian cash transfers as really a breakthrough on how we can handle climate-related disasters and really reduce the amount of humanitarian aid that is even needed in those responses, just by getting more money to people quicker. Yeah. In Kenya also, we have been, like I said, we've been using mobile money there since about 2010. Safaricom has been a super partner. They've done a lot of work helping us with the back end, the B2B part of it, and also with some products and innovations that are now even being used by the government in their emergency responses. So we work very closely with governments. I should have mentioned that up front. We're in about 80 countries, and about 40 of those actually we're working with governments also to help them with their government-to-person payments. And Kenya was one of the front runners on this as well. Just this collaboration to be able to work on new ways of providing money that are more efficient, and then to help the government to set up a similar system.
Thanks, Cheryl. I'm glad you touched on partnerships. We see partnerships to be a key driver of different use cases and value-added use cases for mobile money. So with that, Peter, I want to turn to you to talk about another partnership. MTN Uganda has had a long-standing partnership with Phoenix International, enabling customers to pay for solar power via mobile money. ReadyPay Solar Home System was the first African solar home system kit to be branded by a telecom operator. So can you tell us a little bit about this solution and the benefits of the partnership for MTN and your customers?
Thank you, Ashley. So on the partnership with Phoenix International, it has been an amazing partnership that we've had with Phoenix International. And this partnership was so strategic in the sense that our government has been struggling with distribution of electricity, that is the national grid across the country, right? The national grid is actually distributed majorly in the major cities or major towns of the country. Now, with that being said, that means that there were many part of the population that have been excluded, right? But through this partnership with MTN and Phoenix International, we've been able to actually take electricity, what we would call clean power, to our customers. Today, of course, we have over 9.6 million active mobile money customers, what we call RGS 30, actively participating or transacting within 30 days. And this has majorly been possible because of very good partnership like with Phoenix International. Now, with that being said, Phoenix was able to distribute solar power to the population, to our subscribers. Now, that essentially means our subscribers who have been struggling to look for sources of power, number one, to be able to charge that phone and make a call on an MTN network, now have access to power source where they can actually charge their phone. And secondly, they have also been able now to even utilize the radios, because this also came with radios that was able to give them information which was exclusively being used by those in the urban area. Now they were able to access this as well. Very, very important part of the equation. And then the last and the most important part of this partnership has been the fact that this product was provided to our customers at the most affordable rate. It was packaged in a way that they were not supposed to have a one-time payment for it. It was packaged in a more user-friendly payment kind of approach. It was packaged as a loan where they pay as low as even 1,000 shilling, depending on the package that they would take, which was made easily affordable for our customers. That is very, very critical. But most of all, in terms of MTN partnership, we were able to increase our activity rate in the mobile money. And secondly, we were also able to increase that financial inclusion, because now these customers can be able to deposit money on the mobile money platform and use their wallet to be able to actually pay for the service. And that also brought about other auxiliary services that these customers started enjoying, buy airtime and pay for goods and services, which is now scaled up across. So this partnership has been very, very important to us. Maybe one statistics I can give you is today the penetration of electricity in Uganda, as per World Bank report, is about 41%, 41.3%. But Phoenix has been able to distribute to about 560,000 homes and essentially giving clean energy to about 2.5 million Ugandans. Now, looking at statistics of Uganda, about 45 million Ugandans, you can say 5.5% of Ugandans are being included into accessing clean energy as a result of this partnership. So it has been a very fruitful partnership, helping us to scale on the mobile money side, and at the same time also help our customer to access clean energy. Thank you.
Thanks, Peter. Caine, so Peter talked about including those in having electricity and having financial inclusion through the Phoenix partnership. You play a little bit of a different role in the agricultural value chain, playing more of a broker, bringing these suppliers, who are often smallholder farmers, to connect with vendors and consumers in urban areas. So what does Twiga offer its suppliers, and how do they benefit from using mobile money and working with Twiga?
Sure, thanks, Ashley. So for suppliers, particularly farmers, one of the things we noticed when we started engaging with them was the fact that none of the records were digitized. So yes, they had been growing products for a long time. They'd had access to markets for a very long time, but there's really no data to help you understand how you can assist to help the farmer. And this is everything from even location of the farm, the crops they have and the varieties, things like their yield or their harvest output. And we thought there's an opportunity there for us to really deepen the type of relationship a farmer has with their supplier. So the first thing we did was try to understand what information is valuable to farmers, or how can we engage with them in a constructive way beyond just the transactional relationship of purchasing products. So we then got to work developing our own internal platform. And this enabled us to create very rich profiles on farmers, their crops. And then, of course, with the transactional data, you get a lot more useful information. So when you harvest, how much you harvest, we went into the extent of understanding like the different grades or quality of produce you are getting from farms. And this really helped us, one, advise the farmers. So in terms of when you're coming, when to plant, and basic agronomy advice was something our teams are now able to give. The other thing there was, by now establishing a basis or a digitized form of transactions, we could then now layer things like mobile money. All this was cash-based, and typically the way it still works in some parts of the country is, as a farmer, you'll plant your produce, then you'll look for a broker or someone who's familiar with the market dynamics. They'll come assess your produce, give you a spot price, and it's essentially a take it or leave it proposition for the farmer. Now, in a scenario where you're being more transparent, like in the case of Twiga, of course, the farmer is able to earn a much higher income. And because as an intermediary, we try and minimize the number of players between the farmer and the vendor. It means more of the benefit can go to the farmer and the suppliers. And that also, of course, helps them continue to build their business. For us, we saw an opportunity not just to be the best priced supplier, but to think of relationship in a different context. And that's really helped both the farmers and us. For us, by being able to digitize farmer records, by being able to digitize all our transaction data with them, we've now been able to layer things like mobile money as a primary means of payment. One thing, of course, with mobile money is there's an element of trust one has to invest in. If you're used to a cash-based option where the broker comes and gives you cash, it's then building a relationship that helps you convert that to a relationship that's tied more to the information we have. And with us, mobile money was something we could even do after the harvest. So we didn't have to do it on the spot, although we could technically. But we have a bit of leeway and a bit of time to essentially go to the farm, collect the produce, get it to our sortation and distribution center, and then settle the transaction after we've done the harvest. But that takes effort in terms of building trust. The digital piece was really helpful because for them, they felt they have a record they could actually now come and reference in case they needed to follow up on anything. So those are some of the elements we tied now to the whole mobile money piece to make the whole thing seamless for us. I think looking forward, we see additional opportunities, especially now when it comes to long-term financing. Given the nature of crops and the fact that they take such a long time to grow, one option will definitely be thinking hard about is how do we enable farmers get more financing, because the next stage is now more capital intensive kind of activities, buying farm machinery. Of course, there's the inputs which you have to buy over time before you realize your income. However, this in the context of the information a financing partner has, this has been very thin. But some of the opportunities we see is working with partners such as financial institutions and financiers to then use farmer transaction history to then enable even more financing go to farmers. So those are some of the areas we are looking at. Same also applies on the other side of the value chain. Building that relationship, digitizing as many transactions as possible. So the vast majority of our transactions actually happen through our e-commerce platform. So it's not that's in addition to our call center and our team also visiting vendors in person. That has also enabled us to convert a lot of our vendors to feeling comfortable paying with mobile money. So I think the underlying theme for us we've noticed is trust as one element, digitization as well, because once you have a way to verify and confirm records, people are then willing to do that last piece, which is effecting the transaction through a digital channel. And those are areas we'll continue to invest in. Thanks.
Thanks, Caine. It's great to hear about Twiga's partnerships as well, and just the key success factors. So we've heard a little bit about, or quite a lot about, benefits of mobile money and financial technology, but it's not always so easy. And Cheryl, you yourself even mentioned that I think only 10% of your cash assistance is actually provided through mobile money. So can you maybe highlight some of the barriers to accessing and using mobile money, and particularly focusing on women as well, and what solutions exist to improve financial inclusion, women's financial inclusion, and economic empowerment?
Okay, thanks, Ashley. And I'm so glad that you've brought this topic into the conversation. Often it's left out. And I should just clarify, we only do about 10% in mobile money. We do the majority of our transfers in cash, which is terrible. I mean, it's very, very hard for us to be able to put the accountability systems in place to manage that. It's just 40 million people and $2 billion is a lot of cash to be handling, and it's complicated. Mobile money simplifies, as Caine highlighted, simplifies so much of that accountability issue. It's also really safe, and here I'll talk a little bit about what it's like to be a woman who's had her life destroyed. She's running from conflict, for example. Mobile money is very portable, it's very safe, and it's very discreet. So it's a much more portable and discreet form of assistance than food. Certainly, it's safer than cash for people to be able to move with. So it's just in so many ways the best type of transfer to be able to give to people. Now, for women in particular, the majority of the people in the world who don't have a national ID are women. So there's, I think, about 1.1 billion, that's the estimate, people globally that don't have a national ID. And the majority of those are women in South Asia, I think, and Sub-Saharan Africa. Most of them, about 80% are there. So without a national ID or some kind of robust official ID, as you know, women just can't meet the KYC requirements. So that has to be a number one. Everyone needs to be pulling together to change that. I saw in Julianne's slide, for example, that one of the fintech enablers was eKYC. But if you don't have an ID, even eKYC is not going to help you out. So that's something that's a nut that needs to be cracked, and it is up to governments, but it's not just up to governments. It's up to anybody who's out there touching these communities and interacting with these communities. Then, of course, the other types of barriers in some countries, women can't have a SIM card even registered in their own name without their husband's approval, let alone a bank account or a wallet of any sort. In some places, still, women are not allowed to leave the home without an escort, male escort. So there's just so many barriers for women, and this is really not just about a fairness. Frankly, it's also about prosperity, because we know that there's just decades of evidence that as women's equality in society increases, GDP also goes up, because more of their time is spent in the productive labor force. They're freed up in these types of societies from the carrying the burden of the unpaid care work in society. And as GDP goes up, of course, prosperity goes up, poverty goes down, hunger goes down. So it's not just a matter of being fair. Digital financial inclusion of women is also fundamentally a very important economic issue. Now, the World Economic Forum, or you may not know, they actually calculate if the pace of change towards women's equality remains as it is now, how long it will take for women to gain equality with men. And the latest figure that they released earlier this year is 136 years. 136 years. It was 100 years before the pandemic. So in 1 year, we lost 40 years of progress. That's 40 years of progress towards poverty reduction. That's 40 years of progress towards everything that we're talking about, everything that's meaningful. So this issue of barriers for women, it's not, like I said, just a fairness issue, and it needs to be up front and center on everyone's agenda, because it's affecting everyone globally, and it means that humanitarian needs are going up and up and up and up. And frankly, WFP, we would rather be working ourselves out of business because it's not actually our business to be helping people. We would much rather see governments be able to do that to help their citizens themselves. And but we're never going to get out of this business if needs keep skyrocketing. So we really need to start tying this issue of women's digital financial inclusion really to prosperity and to economic growth.
Thanks, Cheryl. I know this is a topic you're incredibly passionate about, and it's great to hear from you on this. And also a very harrowing statistic that you mentioned, loss of 40 years of progress. It's a hard number to digest. So we have just time for one audience question, I think, before I need to pass it back to Julianne. So there was a question that came through to Peter. What is the partnership model with banks with respect to microfinance or credit, and specifically the elements of revenue sharing, risk sharing, etc.?
Okay. Of course, I think the person who asked the question quite understands very well how it works. The licensing regime is in a way that fintech companies like ourselves are not allowed to give credits and or loans. Or saving from customers. So we do this in partnership. Now, with that being said, of course, the banks have to commit their funds to our customers, and on our side, we also need to provide information that helps the bank to take informed decisions in terms of giving out this credit. Now, the partnership model is in a way that every time a loan is issued out and it is repaid with a certain interest amount that the bank actually levy on these transactions, there is a revenue share component that the bank has to pay to the fintech companies, which is ourselves. But the banks normally do this after first making sure cost of debt or cost, let's start with cost of fund is taken care of. That is number one. They must make sure that they recover on the cost of fund. The alternative use of that fund for any other activity, they try to recover that. Then the second bit is the non-performing loan cover. They also make sure that they take care of the cover for any loan that would otherwise have been lent and not paid back. That's taken care of. And then the residual figure that remain, there is a revenue share component that the bank therefore also then pay to the fintech companies. And majorly because this we are providing data, they're utilizing the customers that we have, and they're utilizing the information we have to take informed decision on their credit scoring. So basically that is how it works. Of course, to customers, many of them would think it is high, which is a given. We know that. But, micro lending does not go without non-performing loans. There will be some percentage of the customer that may not pay back, and therefore the cost may be high from a customer perspective. But just to nail it to the question, the revenue share model is more geared towards the percentage of revenue that is received by the banks as a result of this micro lending, after taking care of the rest of the costs that the bank would otherwise have incurred in the process.
Thank you, Peter. Thank you so much. Cheryl, Caine, Peter, this was a great conversation. It was really good to toggle between some private sector use cases, humanitarian use cases for mobile money, partnerships. And as we celebrate all the benefits that we have seen through mobile money driving financial inclusion, let's not forget there's more work to be done, as Cheryl mentioned, and we still should be focusing on the financially excluded, and with a big focus on women's digital financial inclusion. So thanks for joining me today. With that, I'm going to pass back to Julianne to wrap up.
Ashley, and thanks everybody. We've had from 3 different organizational perspectives examples of how advances in fintech are growing the reach of the mobile money ecosystem for new uses, online marketplaces, or applications in new contexts like the humanitarian and climate resilience and industry sectors such as renewable energy. I would like to thank our speakers for a very enlightening session. Cheryl, Caine, Peter, and Ashley, thank you for sharing your knowledge on this very crucial subject. And thank you again to our back-end teams that worked tirelessly to bring this session to such an organized manner. And a big thank you to listeners for taking the time to be here today. I would also like to acknowledge and thank our donor, the Bill and Melinda Gates Foundation, for their continued support of our program activities. Thank you, everybody, and goodbye.